Howdy, y'all. Welcome to Liberty Call. I am Raymond Dahlman, your humble host here at the Liberty Call, and it is, what day is this? Wednesday, September 27th, 2023. Hope everybody's having a fantastical day out there in the interwebs. I hope it's Wednesday because I just said it out loud. It is. All right. So the weeks just kind of blur together. So anyways, like I said, hope everybody's having a good day out there. The markets were less angry today. Yesterday, red everywhere. You would have thought that the entire global markets were very, very angry at the world. Today, not so much. I mean, some things were in the red most of the day and made their way back into the positive. But again, I think if you're gauging the economy by the stock market, I think things are going to get a little rougher as we go along. Things are just slowing down. I cover a lot of charts with clients about what we're looking at, and things just look pretty grim. Granted, you can look at the rear-looking indicators like employment, consumer spending, those sorts of things. Those things are still pretty good, but the underlying metrics are just not real good. So if you'd like to go through those, give me a call. I'd be happy to go through those. I save those for clients. All right, let's go ahead. Oh, I haven't even gotten to the most important part. If it's your first time watching Liberty Call, I'm glad you're here. Thank you very much. If you do me one favor, give me some thumbs up, likes, shares, subscribes, follows, press the notification bell so you know when I go live. Now we can go ahead and get into the stuff, or into the numbers for today. All right, Dow Jones was down 0.2%, 68 points, closed at 33,550. S&P 500 was flat, up 0.06, closed at 4276. NASDAQ was up 0.22%, closed at 13,092. The VIX fell 3 3/4 today. It's back down to 1823. Canada was down 0.61, Brazil was down 0.22, and Mexico up 0.2%. Over in Europe, Germany was down 0.25%, the UK was down 0.43, France flat, down 0.05, Netherlands up 0.04, so also flat. Spain down 0.37, Italy down 0.31, Switzerland down 0.65, and Portugal down 0.54%. In Russia, both exchanges green, MOEX up 0.51, RTSI up 0.07. And the Asian markets, starting out with the Nikkei, it was down 0.09%, Australia down 0.11%, New Zealand down 0.33%. In China, the Shanghai was up 0.16, the Shenzhen component up 0.44, China A50 flat, down 0.05, DJ Shanghai up 0.31, Hang Seng up 0.44, and the Taiwan weighted up 0.21% for today. So like I said, a little more green, not so much anger in the equity markets, but these things happen. All right, let's get to the market recap for today. S&P 500 inches higher as rising Treasury yields sparked volatile trade. Alrighty. On Wednesday, the S&P 500 experienced marginal gains amid volatile trading, with the technology sector recovering losses despite increasing Treasury yields. Treasury yields, particularly the 10-year Treasury yield, surged to a 15-year high of 4.63%, prompting concerns that the Federal Reserve might need to raise interest rates again this year to counter the resilient economy that could sustain elevated inflation. The Commerce Department released positive economic data, reporting a 0.5% increase in core durable goods orders last month, contradicting expectations of a 0.5% decline. Non-defense capital goods orders, excluding aircraft, a key indicator for business spending plans, rose 0.9% compared to the anticipated steady rate of 0%. Among big tech stocks, Apple led the decline with over a 1% drop, reflecting pressures from rising interest rates. However, Alphabet managed to stay in positive territory, and Meta Platforms slipped 1% lower after unveiling its third Quest 3 virtual reality headset, set to be released on October 10th at a starting price of $499. Sounds like a sweet deal. In other news, cannabis stocks initially gained ground during the trading session as optimism grew regarding progress on the Secure and Fair Enforcement Regulation Banking Act. The acronym stands for SAFER Banking Act. And what it allows for is the purchase, or companies that are in the cannabis industry, to have less restrictions on them as far as where they can keep their money. The U.S. Senate Banking Committee voted to advance the bill aiming to provide legal cannabis companies with access to banking services. However, cannabis stocks, including Kronos Group, SNDL Inc., and Tilray Inc., later turned negative, succumbing to the broader market slide. Meanwhile, Costco Wholesale saw a 2% rise after reporting fiscal quarter results that exceeded expectations on both the top and bottom lines. Despite the challenging consumer environment, Costco's improved margins contributed to the positive earnings outcome. Analysts foresee potential positive catalysts, including likely membership fee increase in fiscal year 24 and the possibility of a special dividend. All right, so that's everything that's going on. It seems like everyone's in a much better mood today than they were the last couple days. So, all right, let's get on to some data. U.S. durable goods orders beat expectations in boost to economy and the third quarter. All right, in August, orders for long-lasting U.S. manufactured goods increased, showing resilience in business investment and the overall economy despite the Federal Reserve's tight monetary policy. The Commerce Department's report revealed a 0.2% gain in durable goods orders, driven by increases in machinery and other products, compensating for a decline in civilian aircraft orders. Shipments of capital goods rebounded sharply, indicating strength in the business investment. While some economists adjusted GDP growth estimates for the quarter, others cautioned that the rise might be influenced by higher prices due to inflation. The durable goods orders, covering items intended to last 3 years or more, rose 0.2% in August, with July's data revised lower to a 5.6% decrease. Despite downward revisions and inflation concerns, the strength in other areas of the economy suggested solid footing for the third quarter, or for third quarter growth. Machinery orders increased by 0.5%, while bookings for electrical equipment, appliances, and components jumped by 1.1%. However, orders for primary metals fell by 0.6%, and transportation equipment orders slipped by 0.2%, influenced by a 15.9% decline in civilian aircraft orders. Non-defense capital goods orders, excluding aircraft, a key indicator for business spending, surged by 0.9%, marking the largest gain since January. Core capital goods shipments rebounded by 0.7%, contributing to the calculation of equipment spending in the GDP report. Some economists adjusted their third quarter GDP growth estimates, while others cautioned that business spending on equipment might contract in the current quarter. The overall picture suggests manufacturing is muddling along, contributing 11.1% to the economy, despite surveys indicating a sectoral recession. The report reinforces the resilience in the manufacturing sector and the potential for another solid quarter for equipment investment. So again, it's kind of that Goldilocks. It's not terrible. It's not great. It's just kind of in the middle right now, just kind of, like they said, muddling along. And, we'll see. I mean, again, big picture, a year from now, do I think the markets are going to go up or down? Based on the big picture, I personally think down. Again, I could be completely off, but based on charts, the economic data that I go through on a regular basis, I don't have a positive outlook right now. If we were bottoming out, like we should have done, 3 summers ago or 3 falls ago at this time, instead of printing all that money, we would have bottomed out. The economy would have, reconsolidated, and then the markets would have gone back up by this point, I imagine, because we wouldn't have had all that inflation. I mean, yes, there was inflation built up from keeping rates at zero for, basically the 20 teens, but I'd rather deal with that than that and another $5 trillion in inflation that the Fed created for COVID. So anyways, all right, last up comes from Zero Hedge. The article is titled Shutdown Toward the Brink, or Why This Time May Be Different, written by James Rickards of dailyreckoning.com. All right, get my notes up here. As the possibility of a government shutdown on September 30th looms, investors are advised to consider defensive actions. The U.S. fiscal year ends on September 30th, and it is the responsibility of the Congress to pass appropriations bills to keep the government running in the new fiscal year. However, the regular order process, where each major department has its appropriations bills passed before the deadline, seldom happens. Instead, continuing resolutions, or CRs, are often used to extend spending at existing levels until the new fiscal year budget is agreed upon. This time, the potential shutdown differs from previous instances, as it is not driven by a specific policy like Obamacare or the border wall. It revolves around the broader issue of government financing and strategies to cut spending for fiscal prudence. The divisions are not only between Democrats and Republicans, but also within the Republican House caucus, where there's a stark contrast between budget radicals and moderate members. I'm sure those radicals are more like Matt Gaetz, who basically wants everything to be voted on individual, this bill is for this specific thing. Yes or no? as opposed to mushing them all together and it's an omnibus bill and then it's like up or down. And, if you vote no, you're the bad guy because you don't want to fund the military or whatever. I mean, granted, you could probably cut the military by 90%. We'd all be fine. But it's basically daycare for 20-something-year-olds. I know, because I was one of them. So, all right, where were we? The shutdown, if it occurs, may last longer than the 35-day standoff in 2018, which could pose a significant threat to the economy already teetering on the edge of a recession. Dun, dun, dun. History shows that government shutdowns, although accompanied by political drama, have had limited economic impact. National security, defense, energy, and the White House operations continue unaffected. However, with Democrats historically prevailing in policy fights and Republicans taking the blame for shutdowns, the Democrats, media-backed, are seemingly in a favorable position. The potential shutdown has complexities, including the House Speaker McCarthy dealing with a slim majority and facing rebellion from conservative members who demand separate appropriations bills. I don't know why that's controversial. Right. And to finish up here, investors are advised to reduce equity exposure and increase cash allocations until there is clarity on the budget situation. With potential damage to an already fragile economy, defensive actions are recommended, and investors should prepare for the worst while hoping for the best. Well, that's just an idiom that I say that all the time. Life falls between 2 points, the worst and the best. It usually falls in the middle somewhere. Nobody's life is always terrible or always great. Even the person you look at and say, oh, their life is perfect. They got a lot of crap going on that you probably don't know about, whether or not it's health or family or, relationships or whatever it could be. There's always something that's messing with, so you're not alone out there in the world. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening and I'll talk to you next time. Adios.